Believes in the next 12 months, they could be challenging because of the macro environment. But one analyst at Bernstein feels like Tesla's challenges don't stem from that. He feels like Tesla's challenges are coming from its limited model lineup, and that 2024 could be even more challenging for Tesla. Nicole.
Tesla's CEO Elon Musk announced that a recession is looming, and Tesla, as well as other car companies, are not immune to it. What lies ahead for automakers in this period of uncertainty?
Our next guest, though, says we should be using a different word than recession to describe the current state or even the near future state of the U.S. economy, and that word is resilient. Joe Brusuelas, RSM chief economist, is with us now. Listen, I am curious for your view on what Rick was just talking about, but let's get into this resilience versus recession discussion first, Joe. So it sounds to me like you don't think a recession is indeed around the corner.
Well, we're not in one now, and our model says the first chance that we would fall into one would be early next year. So I would agree in general with what Rick said. You know, the $5 trillion put on the table was the first time the federal government's really used fiscal firepower in a significant way to alter the dynamics and trajectory of the American economy since the mid-1960s. Yeah, we got some inflation out of that, but I would argue most of the inflation we got was due to the supply chain shocks followed by the Russian war in Ukraine, in addition to the demand where we had too many dollars chasing too few goods.
Morgan Stanley has often emphasized the long-term growth potential of Tesla. The firm has recognized the automaker's ambitious goals in terms of vehicle production, battery technology, and energy storage. They have praised Tesla's leadership in the EV market and its potential to expand globally. However, the firm has not ceased to reveal concerns about the growing competition and the likelihood of EV supply exceeding demand in the near future. According to Morgan Stanley's analyst Adam Jones, while the EV maker and its market is still rising, it appears to be decelerating. So, find out more on what Morgan Stanley has to say. Hey everyone, and welcome back to Tesla Tomorrow. Tesla has consistently proven itself to be a formidable player in the automotive industry. As the world faces the challenges of a recession, Tesla is well positioned to navigate these turbulent times and even thrive. Earlier this year, Tesla fell from being Adam Jones' favorite United States-listed automaker. The analyst said he preferred Italian luxury car maker Ferrari NV, saying that it has the largest and longest order backlog, greatest earnings visibility, and highest pricing power of any company that the firm covers. In April, however, the firm reiterated its overweight rating on Tesla and fixed a $220 price target on the automaker's stock. Morgan Stanley has made several notable statements about Tesla, highlighting both positive and negative aspects of the company. And once again, the firm shared its opinion about recent updates from Tesla. We'll get more into detail on this later on in the video. But before we get started, if you like this type of content, hit that like button, subscribe to the channel, and turn on notifications to keep up to date on everything going on with Tesla. Morgan Stanley has expressed optimism about Tesla's future prospects and its potential to revolutionize the transportation industry. In his recent notes, Adam Jones shared some of his feedback following Tesla's recent shareholder meeting in Austin. He also noted that he'll be touring Tesla's Gigafactory in Texas with a group of investors to learn more about production ramp, progress on 4680 cell manufacturing, Cybertruck, and other developments. Adam Jones cited Elon Musk's announcement, which emphasized the importance for advertising to be both fun and informative, and that the best advertising must be as close to content as possible. According to him, Tesla needs to have a discussion with its TMT teams about the importance of content creation and delivery in an ecosystem. He added that by doing this, investors would not look at a potential Tesla media as a distraction from the company's core mission of accelerating sustainable transport. One of the driving forces behind Tesla's success is the increasing global demand for sustainable transportation solutions. As concerns about climate change and environmental impact grow, governments and consumers alike are increasingly turning towards electric vehicles. Tesla's commitment to producing high-quality, energy-efficient cars places it in a favorable position to meet this demand and maintain steady sales, even during an economic downturn. However, Adam Jones did say earlier this year that he does expect the tables will actually start to turn on the EV supply-demand paradigm in 2023, with supply finally exceeding demand, reversing the last 2 years' prevailing trend. He also added that this reset year for EV markets will have widespread implications. The investment expert also noted that 2023 may not be an easy ride with several hurdles to overcome, including the weakening macro backdrop, record high unaffordability, and growing competition. Jonas further stated that if Tesla leverages its cost and scale advantage, then he expects the automaker to pull ahead in the EV race. In a recent note, the Morgan Stanley analyst stated that while Tesla wants to become the highest volume auto company in the world, it would require a range of vehicles to do so. This way, the car company can address a wider range of customers across retails and fleet applications. Tesla's technological edge in the EV market sets it apart from traditional automakers. The company's expertise in battery technology, software development, and autonomous driving has allowed it to build a loyal customer base and establish a significant market share. By continuously investing in research and development, Tesla can stay ahead of its competition, driving innovations and attracting customers who value cutting-edge technology. While Tesla's primary focus has been on producing electric vehicles, the company has expanded its product portfolio to include energy storage solutions, such as Powerwall and Powerpack, as well as solar energy products like Solar Roof. This diversification strategy reduces Tesla's reliance solely on car sales and provides additional revenue streams. During a recession, the company can leverage these complementary products to mitigate any potential downturn in vehicle demand. Likewise, Tesla's commitment to expanding its global footprint has been a key driver of its success. By targeting multiple markets worldwide, Tesla has created a diversified customer base that helps to mitigate risks associated with regional economic downturns. This global presence allows the company to adapt to changing market conditions and prioritize investment in regions with more favorable economic climates during a recession. Morgan Stanley considers Norway as an important market for analyzing electric vehicle adoption trends, especially since the country is estimated to be 19 years ahead of the US. For context, Norway reached an impressive 79% EV sales penetration for 2022. Morgan Stanley's EV forecast estimates that Norway is 19 years ahead of the US in terms of EV sales penetration, and 13 years ahead of EV fleet penetration. This was despite the fact that Norway's geography is not really optimized for battery electric cars. Overall, the firm notes that the government's incentives and low electricity costs that reduce EV ownership expenses are among the key drivers of Norway's expansion in terms of EVs. Interestingly, Tesla took the top spot in Norway's race to EV goal in 2022. 4 out of 5 cars sold in Norway in the year were battery-powered, led by Tesla, but some in the industry say new taxes could prevent the country's goal of becoming the first nation to end the sale of gasoline and diesel automobiles by 2025. According to registration data, Tesla sold more cars in Norway than any other brand for a second consecutive year, clinching a 12.2% share of the overall market ahead of Volkswagen with 11.6%. Tesla has made significant strides in improving its operational efficiency and manufacturing capabilities. The construction of gigafactories such as those in Nevada, Shanghai, and Berlin has increased production capabilities and also helped to reduce costs. As a result, Tesla can achieve economies of scale, lower production costs, and offer competitive pricing to consumers. This operational efficiency positions Tesla well to weather the challenges of a recession and maintain profitability. While a recession presents challenges for any business, especially one like Tesla, the automaker's unique position in the market technological leadership, diversified product portfolio, global expansion strategy, operational efficiency, and government support give it a strong foundation to overcome the economic headwinds. By capitalizing on the demand for sustainable transportation, leveraging its technological advancements, and maintaining its commitment to innovation, Tesla is poised to navigate the recession successfully and continue driving the transition to a sustainable future. Many governments around the world have recognized the importance of transitioning to electric vehicles and have implemented various incentives and subsidies to promote their adoption. These incentives can help stimulate demand for Tesla's products, even during an economic downturn, and provide a supportive framework for the company's growth. But what do you think? What are your thoughts? Let us know down below in the comment section. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.